This is the face of sarcasm! Hey, how are you, everybody? Enjoying the stock market rally over the last couple of weeks? Hasn't it been so fantastic? Oh, wait a second. Were you one of those people that's been sitting on the sidelines, looking at $12 stocks, wondering if they were going to go to zero, and now they're all trading at 25? Are you feeling like you missed the boat? Well, welcome to day trading. Ain't it fantastic? Oh, it's the greatest way you can ever lose your money that's known to man. At least in Las Vegas, if you lose your money, there's somebody there to get you a drink and possibly a lap dance. At least there's somebody there to flirt with you and make you feel better. Here I'm just sitting by myself, lonely, alone, and broke. You know, the only reason I've made money over the last week and a half is because I bought 100 or 200 or sometimes 300 shares of every stock that I liked. And I said to myself, you know what? It's only 100 or 200 shares. If the stock does go to zero, I can risk it. And you know what? I'm making money on all 20 positions. It's unbelievable. Now the question is, if I would have actually bought some decent sized positions on any of these positions, if I would have been making money. Now, I don't think it would have happened. Nothing. The market would have been tanking. We would have been at Dow 5,000. And I would have been just wallowing in misery, probably asking myself why I did that. There's no winning. There's no winning whatsoever. If I buy a small lot, I make money. If I buy a lot, I lose money. If I try day trading around the position that I'm in, I wind up just taking money out of one account and putting it somewhere else. Waste of time. So, everyone's asking me why I'm so bullish right now. Why am I so bullish? Well, here's what it is. I'm not exactly bullish to the point where I think stocks are going to explode. But at the same time, I have already felt that I've missed the boat. I missed the boat buying the Chesapeake. I got some at 16, and the stock's taken off on me. The Akamai. The crazy thing is, I'm looking at stocks that are trading so much off their lows, it's unbelievable. Sometimes it will take you a year to make that in a trade. 2 years, 3 years. Options Express at $12.50. I was begging you guys to get into that stock. The stock's sitting in now $17.50. Now here's the thing. I've been talking about something called selling naked puts. Selling naked puts. Wow, this song's actually making me gay. Hold on a second. I gotta change this song. Let's get this one instead. The story is, what I'm trying to do here is I don't care if the market goes up. I just don't want it to crash anymore. I just don't want it to crash anymore. I just don't want it to crash anymore. Selling naked puts on stocks. What that means is you go out. Now, if you're a put buyer, okay? Hold on, chat room. I'll be right back with you, okay? Hold on a second. If you're a put buyer, you're looking for the stocks to go down. Now, with so much fear and panic in the street, people are thinking that everything is going to zero. So you're looking at a stock like Chesapeake. When the stock was 16 bucks, okay? There was value, which was unbelievable on a, okay, where am I now? I've lost track of my soul here. Okay, there was value on a $5 put for January. That was basically saying that this stock was going to go under $5. Where did I sell these at? $0.60. So basically what I'm saying is I will hold on to these puts till expiration. I'm betting that by January expiration, that Chesapeake will be above $4.40. Because if it goes below $4.40, therefore then I'm losing money. The stock will be put to me. What that means, they will place the stock in my account at $5, minus of course the 60 cents that I took in. So my cost average would be $4.40. So if you think that Chesapeake will stay above $5 for that extended period of time, you sell the puts. So what I've been doing is I've been going around to stocks that have already reported numbers. So any news that's out there is pretty much out there. With the Options Express was really stupid. Instead of buying calls on the stock, I sold some $10 puts when the stock was at $12.50, betting that the earnings would be somewhat decent and the stock wouldn't crash again. So here we have a situation where selling the put, you don't make any money, you make some money. I sold, I think, the puts for 50 or 60 cents, but the stock went up 5 points. Yeah, 5 points. $12.50 to 50 cents. Good thing I had the 100 shares at 12.50, 12.60 to be exact. And if you were in the chat room that day, I was telling everyone to get in at 12.60 because your downside was so much less than your upside on that stock in particular. And then we have the Broadcom. The Broadcom, notoriously, every time it falls at these levels, somehow they say something good enough to get the stock market to get the stock to rally. So I was telling you, if you don't want to buy calls on the stock because the stock might have had the options were still well. Yeah, I'm going on way too much. My brain's starting to go on without me because I'm seeing the market just won't stop. The market's not going to stop going up, okay? Because this is the wall of worry. Everybody's worried that we're going to go back down, but the market goes up, so the buyers grudgingly get back in, and then we'll have what you know as the capitulation top. That's when you can finally say we're going to actually pull back. But you know what? We're not going down. So if you've missed the stock that you like, sell a naked put on it because the chances are it's not going to go back to those levels. You're not going to get a chance to buy back. As much as everybody's saying how they want the market to make a retest, didn't we retest? What was that? We were crashing the other day. That wasn't good enough for you? What? We got to crash another time? 3 times? Is that good? We have to go to the exact lows where we came from? I don't think so. Bottom line is, you missed the boat. You missed the boat. You missed the boat. And if you want to play conservative like I'm doing, the Qs, the QQQ, $22 puts for December. If the Qs go back to 28, maybe you might want to think that we're going to go a little bit lower. But right now, we're not going down. Every down has been a buying opportunity. Haven't you noticed that yet? Even if we give back all of this rally today, Dow's up 200 and Nasdaq's up 37. We can give that back in 2 seconds. The bottom line is, I don't think we're going to be crashing anymore, and that's very important. I don't think we're going to be going down, breaking those lows. And even if we go to those lows, I'm selling options below where the stocks were even down at that point. Do you follow me? Do you notice what I'm saying? The bottom line is there's a lot more money to be made if you buy the stocks or buy the calls than if we explode to the upside. I'm not thinking that we're going to explode to the upside. And if we do, I'll be there to do it on a daily basis. As much as I hate trading right now because it's as soon as you get into a trade, it immediately starts going against you. You think you've topped the stock market out. 40 minutes later, the stock's breaking new highs. You get back in, you do it all over again. Meanwhile, you're making $100, where if you just bought the stock 3 days ago and just not looked at it, you're making 3 or 4 points. So right now, if you want to be in the market, buy your stocks and buy a put underneath just to protect yourself from a crash. But if you want to do it a more conservative way where you have to just sit and wait for your money, and I think that's going to be the way to do it, sell some naked puts at prices where you think these stocks will never go to. Chesapeake's not going to $5. DRYS was not going to $7.50. Okay? That's the way I was looking at it. Oxford, the Option Express, I thought it wasn't going to break $12.50 ever again, and it worked out. The Broadcom, I didn't think it was ever going to break $12.50. So those are the strike prices that I chose. But again, if I just would have bought the stock and some calls, I would have made 3 or 4 points on everything. But that's my plight. I make a little bit of money where I should have made a lot of money. That's why I come into the chat and I tell you what to do. That's why I'm loving the DRYS, because it's escaped me. Because it's escaped me. When the stock was at 15, I tried to buy the 17.5 calls. I didn't want to pay up for it. When the stock started rallying, I had to go. I had to leave. I was in the chat room. I told you I was in the dryers. I was selling out of it at 17 bucks. I get back this thing's at $19. $40 on the dryers. 40. It's going to go to 40 before anybody knows what the hell's going on. Watch. Watch and learn. Watch and learn. Or I could just prevent any of this from happening just by buying the calls on the stock. I'll buy $20 calls. I will rock and destroy the stock. I'm just shot right now. Whatever I do now, if I go above 200, 300 shares, I guarantee myself losses. So I guess I should be happy with making a little bit of money, because whatever I do, the next thing is going to be something big. If I do something big, it's just going to be a loser, so I just might as well stay away. It's just,